Hello, everyone. Welcome to tonight's webinar, How to Find the Best Options Trades with this Proven Magic Market Map. My name is Henry Gamble. I'd like to thank you for being here and taking the time to invest in yourself and learn something about trading. I've been an active trader for a little more than 13 years, and I've been fortunate to have several excellent mentors along the way. One of the most helpful is tonight's co-host, David Starr, the creator of the Voodoo Lines. David and I have spent the past year or more working on creating a system for trading options around these levels of support and resistance. The Voodoo Lines can be thought of as a map for price charts. We have a destination in mind, and along the way, we may stop here or here. We may find a bridge to cross there, but we have a good overall idea of where we are and where we're headed. With this map in front of us, we can begin to structure option spreads to take advantage of a myriad of situations. The Voodoo Lines are comprised of 5 primary components. We have the fire line, the tree line, snow line, sky line, and the moguls. Each of these come with their own characteristics and nuances that when applied diligently can yield extraordinary results. Extraordinary results like what we're going to be showing you tonight, where you can sell directional options at the dead high, where you can pick up entries near the low, where you can structure theta positive spreads and have short strikes that are never tested. All of this is possible with this revolutionary study set. Take, for example, this trade in Caterpillar. This is my exit from a trade that we'll be discussing a little later this evening. This image was taken at the end of the day, and you can see my fill price is the high of the session, right? You know, you have your daily bar here. The highest price that option traded that day is where I was able to exit with the assistance of the Voodoo Lines. Fast forward to where we are now, and you'll see that these June 222 calls in Caterpillar still haven't traded for a better price than our exit. We sold the high, and to this day, that is still untouched. And how about that move in GameStop? Have any of you been trading GME? This stock gained a huge amount of attention after the initial Wall Street's bet squeeze and was in play again during the 3rd week in May. This actual setup is one of my favorites, and it's something that David and I will be teaching you how to identify. I played the move with 2 different strike prices, and over the course of about a week was able to more than triple each of them. These are the entries and exits mapped out on the chart, and then you can see them here through my tasty execution. This is the kind of precision that you can have by learning the setups that the Voodoo Lines map out. It's an excellent way to study charts, and when applied correctly, will bring a distinct edge to your trading. But before we get into all the juicy details of this analysis, I'd like to take a minute to introduce myself and David. So again, my name is Henry Gamble. I've been a part of Simpler Trading for more than a decade and trading stocks since 2007. I met John Carter some 13 years ago doing a service call through Geek Squad. After dozens of service calls and ultimately spending more time working for him than I did at Best Buy, he suggested that I come on as a full-time employee. He knew that I had a background in gambling, mostly through Texas Hold'em, and he also knew that I'd been working to grow a small stock account through Scottrade. With that, I took the job and began what would be the journey of a lifetime. One of my favorite stories to tell is the one about my IAG trade. I had been working with John for a few months, and he'd been letting me log into his TradeStation account under his demo account so that I could learn the platform. I think it was a Friday when all of this went down, and I'm sure you guys know the feeling where you sit down to your trading desk, you open your platform and start thinking, today's the day, right? I am going to make something happen. Thinking or having this mentality and thinking that I had logged into his demo account, I then proceeded to place the entire account into IAG shares at the market. I've had to copy and paste this image a few times over the years, but here you can see the purchase of 61,800 shares of IAG about an hour into the cash session. Here it is with a little more detailed view. This is a 1-minute chart, and right about the 9:30 central mark, you can see the largest volume spike on the day. That was me. And I guess you might call this the my version of the 80s classic movie War Games, right? Where you think it's a simulation, but in fact is quite real. As it went, I placed this trade and then began setting up John's new home theater system. He had bought some new Klipsch speakers and a new HD TV so we could watch Harry Potter on Blu-ray during the day because, of course, you don't watch the news, right? It wasn't until several hours after this when he called me over to his desk, having figured out what I had done. After recovering from the sinking feeling that only YOLOing $1 million that isn't yours can provide, we began scaling out of the position and ultimately were able to pocket right around $34,000. I always pause to take a moment of gratitude when I tell this story, incredibly thankful for the fact that the trade did work out. Right? I could be giving you a very different story right now or no story at all. But fortunately, I am still here, and that experience really opened my eyes to the potential of trading the markets. That was a very transformational period in my life, and it's also when I began reading The Alchemist. I discovered the quote, "When you truly want something, all the universe conspires in helping you to achieve it." I believe that probably has something to do with where I am now. As a husband, and the more recent development of also becoming a father, right? The last time we spoke, Will wasn't quite here yet. He's now almost a year old, and his mama and I couldn't be more thankful. So that's a little bit about me, some of my history, my past in trading, and how I got to where I am today. Now let's take a minute and talk about how I came to know David. David is the creator of the Voodoo Lines. I've known him for many years now, and our story begins when he attended one of our Austin mentorships in 2011. David had developed an indicator that he felt would complement John's trading and wanted to share it with us. From there, John and I began to review the analysis that David had provided and found it surprisingly accurate upon initial review. Further investigation yielded exceptional results, and the two of us, myself especially, have since become devoted followers of the Voodoo Lines. With that, I'd like to turn things over to the creator, and David can tell you a little bit about who he is and how he's been leveraging this study set in the current market.
Hey, thanks, Henry, and thanks everyone for spending a little bit of time with us here this evening. As you can tell, Henry is a big fan of the Voodoo Lines. Likewise, I am a huge fan of Henry's work. If you've taken a class with Henry, or even stepped through some of the trades he's taken in, some of the trade setups in our trading room, then you already know how methodical his approach is. Methodical in the clear way he presents ideas, and also in how he plans and executes trades. I consider myself extremely fortunate to have been able to collaborate with Henry for over a decade now. It's kind of crazy to think that it's been that long. So long, in fact, that back when we started, if we were planning trade ideas without being in the same place, we were doing it, in Yahoo Messenger over here. Now the picture on the right, that's a little more current. This is me with just the side of my head. That guy in the wrestling mask there, that is Mr. John Carter himself, and Henry Gamble there in the hat. That's from a couple of years ago when we were all down trading together in Grand Cayman. But whether it was online, in person, or on the phone, one thing which remained consistent over all those years is that Henry and I kept working on developing a methodology to use options trades in a way which takes advantage of the systematic price movements between Voodoo Lines. If you've taken trades we've shared in our trading rooms, then you've likely already been trading our method without even knowing it. Most of our trade planning these days is based on this system. A little over a year ago, we decided that it was finally comprehensive enough to document and share with you, and we've been finalizing that process ever since. But before we start looking at some examples of those trades, for those of you who don't know me, let me tell you a little bit more about myself. Trading is my third career. I actually started in technology all the way back in junior high school, right? Building software for local small businesses during the very early days of the microcomputer. I started investing not long after, putting my profits to work in the markets, and I continued to be an active investor through most of my career. I joined CompuServe out of college, working with the small group that developed their flagship Forum product, then went on to run product development for a company where I was awarded several wireless patents for technology that's in virtually every smartphone, likely the one you use. And I was the chief technology officer of several companies, including one of the largest websites on the planet. Now, my second career was in management consulting. I started my own practice after getting my MBA, and I graduated as class valedictorian. And that's also when I started trading instead of just investing. Most of my consulting work was running large strategic projects lasting 6 months, a year, or more, and there wasn't always a new project lined up when another was ending. So trading became a great way to earn income in between. But it wasn't so great at first. I was fooled into thinking that I knew everything I needed to about trading. I was already a good investor, and I studied markets and all sorts of complex futures and option strategies during my MBA. And hey, I saw those same ads that you probably saw on TV. You know, the ones pitching different trading companies and showing their platforms on a gazillion monitors full of charts and graphs. And with my background, charts and graphs, that's where I live. But I didn't realize how much of trading is about psychology more than math. And once I did, I put those same technology, creativity, and innovation skills, which served me previously in other careers, I put them to use in building tools like the Voodoo lines, creating indicators which incorporate both math and psychology into pinpointing important levels. And as I did, my trading started to become more consistent. All of this started coming together at about the same time I found myself as the single parent of 2 kids who needed me at home. And with the trading thing finally figured out, it was an easy decision to wind down the consulting practice and trade full-time. Voodoo lines was one of the tools that made the difference not only in my trading, but also in my quality of life. And the indicator, combined with the strategies Henry and I have developed, right, you can end up using them too in your trading. So let's go ahead and look at how trades from those strategies have played out in the S&P 500 recently. And I think you'll see why we're so excited to finally be able to share these strategies with you. So here's a chart of the S&P 500, all right, a 30-minute chart. And I started a campaign of bullish trades, right, entering the long side back here on March 25th, the day that the market turned back up after about a week and a half of selling. And then I added on to that long position the next week, right, layering in 2 trades. One was a trade designed to profit if the S&P 500 held this level down here, held 4060 before the options expired. It was an options position, which is roughly the right edge of this line, and then a second position for price to get either to or above this 4150 level, again, by the same time. And you can see it just barely eked it out, but that's all we needed for that to pay. I was in our options trading room that week, so some of you who are members might recall when we set these trades up live, right? And when you have a good feel for levels which are likely to come into play, these strategies to either hold or reach certain levels, or even doing both at the same time as I did, they can be a fantastic way to implement trades, right? Trades also like this one, to turn back up after the market pulled back, right? Or another one designed, again, to reach to a specific level up here at 42.50, again, by this expiration, and it fell just a tiny bit shy, but with the strategies we were using, getting that close was still enough for that trade to pay off handsomely, right? So, so once we come in, right, and layer in the voodoo lines on top of the chart, you can see why I had such a good feel for the levels. The price action no longer seems random. Instead, you can see how price moves from line to line to line. And the trades also no longer look random. Instead, they're constructed to take advantage of one or more of the three behaviors which you're going to hear us talk a lot about this evening. Price moving away from a voodoo line, price moving towards a voodoo line, or price consolidating at a voodoo line. All of these trades take advantage of the tendency for price to move systematically between the voodoo lines. Right? When the S&P 500 turned up from this skyline back here, this lilac-colored level down here, one of the voodoo lines, you can see it magnified right here. Price came right down to it and reversed. That was the spot to start thinking about getting long. And then from there, what did it do? It came back above the next skyline up, tested it from above, and held. Right? That started to confirm the reversal. And then it tested and held this white skyline. Same sort of action. Come above, test and hold, and back up. That's what I'm talking about when I talk about systematic price action. And what we saw here at the snow line, that provided even more bullish evidence. Right? Snow lines are more important levels than skylines, and holding them is an even more important bullish signal. So what we saw from there, right? We ran up, right up to test the next skyline up and pause. But the strength of the move up from that snow line, right, was enough for this to eventually work its way back above that skyline and even test and hold, there to continue up, right? To the next skyline up, and so on and so forth, eventually, right, running right into the red fire line, the most important of all the voodoo line levels. And you can see how we kind of stick there like glue for several days, right? One of those actions that we talk about, consolidating at a voodoo line level, but the fact that it did consolidate here and not reflect downwards as it could have done, right? But when we read the price action and see that it's consolidating at that level, that tells us that we are more likely than not to continue this bullish advance. And this was the spot to layer in some of those trades that we saw earlier, right? When we're only consolidating, looking to continue, we build trades to hold support and target upwards towards resistance. And that's exactly what we did. We continued up, right, to the next skyline up here, right, pausing there. And even these least significant little dashed moguls here, right, you can again see it magnified. Those are spots where you can put on trades to continue the trend, running right up to where I finally exited the position, because the last of my bullish options positions were, making money on expiration day, finishing up right there at the all-time high at expiration. It is this order to the price action which makes voodoo lines so central to the way both Henry and I trade. While we can never know exactly how price will act at a particular level, just being able to know that certain levels have significance, and by using that knowledge to focus our trades on price moving between those levels, it gives us an edge. And we can maximize the value of that edge by combining the right option strategies with the right levels at the right time. And nothing highlights this idea of the right levels at the right time like the way the first part of this bullish campaign in the S&P unfolded. We'll talk about it continuing in a minute, but just this first part, right, ending at the all-time high and then coming right back down to the voodoo fire line. And by using, right, all of these trades that make up our strategy, we were able to exit our bullish positions and be completely flat when price came back down. Where? To the voodoo fire line before turning back up. Being out of those bullish positions at resistance freed me up to reload long at fireline support. Exactly what we're told that we're supposed to do as traders, right? Sell at resistance, buy at support. And we want to make that easier than most traders seem to find it. And so, you know, the question is, right, if you remember some of the things that we looked at before, right? Yes, this came ever so slightly below this voodoo fire line and then popped right back up. But you remember, you know, even the bullish setup we looked at before, where price reflected right at a skyline. You remember that from a few minutes ago, right? And then remember what we looked at also, this systematic come back above, test and hold, and then turn back up. Can you spot that? And if you did, do you think that from the examples before, this is something that you could have traded bullish against? Because that's what I did, right? And within 2 days, right, less than 48 hours, getting in down here got me a trade to ride the S&P 500 more than 100 points in less than 48 hours right into a voodoo skyline. I took profits here. And yeah, I reloaded here for a move back up, just a modest one into a skyline and loading up down here, right, or getting up. And what do we do? Continue that systematic, come back, test the skyline, head back up, right? This is my absolute favorite setup in the voodoo lines. Test, come to the other side, fail on the other side, and then test and hold, and off you go, right? And so the biggest part of the move, right, even though there was some reloads back here, that fire line to skyline move and pinpointing the levels to get there. And once you understand the systematic way that price moves between the lines and you understand the trade strategies to take advantage of those moves, you can construct a campaign of trades just like the ones you saw in the S&P 500, which not only take advantage of the overall trend, but also take advantage of identifying the spots to get in and get out with the various wiggles along the way. By finding these opportune spots to get in, spots to add exposure, and spots to take partial or total profits, right? I was able to create an overall campaign where the per contract profits added up to nearly $13,000. If you haven't seen these voodoo lines before, then without that prior experience of their uncanny ability to reveal hidden spots of support and resistance, you might be wondering what they are. And look, they're loosely based on Elliott Wave. I say loosely because we don't want to get bogged down with the most common problem cited with Elliott Wave. People say it only works in hindsight. That is, waves can be used to describe patterns unfolding in the market and to anticipate how far they might travel and when they might reverse. But the problem is that without knowing exactly which pattern is unfolding, it can be difficult to get any value from the analysis. Voodoo lines turns that problem on its head using the same creativity I put, towards all the inventions that got my patents and whatnot, right? I always like to take a look at things from a new angle. And in here, right, this problem with Elliott Wave is one of emphasis. It only works in hindsight. It makes it so easy to dismiss. But the focus if you put it on the words "it works" and not so much on the words "in hindsight," then suddenly there's a clue to getting some real value. If analysts disagree about what's happening over here, right, on that right edge of the chart, the fuzzy side, well, okay, let's go and use the left side, right? Right? Let's use our hindsight. And let's take the patterns that occurred so long ago that none of the Elliott Wave folks disagree about what patterns likely unfolded. Right? And then we use those to project levels back on the right side of the chart. Now, look, it's a little more complicated than that, and it is a pretty intricate process, but at the core, that's what voodoo lines do. And the proof is in the levels. Right? The levels that the indicator generates. And the proof is in the trades that result from those levels. Trades like the ones we talked about in the S&P 500 and some more, which we'll show you in just a little bit. Right? All of which make use of the systematic way in which price moves from voodoo line to voodoo line. And so here's a chart of Tesla, right? Because voodoo lines aren't only for the S&P 500. Tesla is another chart that Henry and I have been trading a lot recently. And it's yet another reason of why we focus on only trading charts which have the voodoo lines available. Since the indicator only works with symbols where we've gone and studied those patterns at the left edge of the chart, it's not going to work on everything. But there are enough symbols like this Tesla chart where it works. We have no trouble finding trades, right? And you got to ask yourself, right? If you've been trading for a bit and you're used to trading at support and resistance, would you have wanted to know that there was a tree line right here at the bottom edge of this chart, right? Or a snow line right up here at the top edge? And if you did, could you have made use of that and how price reflected from both of them right back to this all-important voodoo fire line, getting sucked in by the gravitational field there, right? These were great levels to trade each time. And this ability to pinpoint potential areas of support and resistance before price gets there allows us to construct option strategies which profit from moves to, from, and between the levels. And you only need a little bit of time watching price interact with the voodoo lines to see how uncanny that action is and the way it respects, right, all of these levels. Now, what takes a little bit more time is to learn how to interpret the price action at the levels and then how to trade around them, like the examples from the S&P 500, right? And that's what our method is all about, right? Helping you to not only be able to read and identify the price action at those patterns, but also construct the trades to take advantage of it. Henry's got some more great examples of trades which he's taken based on these Tesla moves, plus a bunch others. So at this point, I'm going to turn things back over to him. I'll be back with you later when we'll have some time for Q&A. But right now, I want you to let Henry tell you about some of his trades and more about these unique strategies which we've created to help you take advantage of the way price moves from voodoo line to voodoo line. So with that, Henry, I will let you go ahead and take it from here.
Excellent. Thank you so much, David, and thank you for your review of that SPX campaign. As we look at this with Tesla, Tesla is one of my favorite stocks to trade for several reasons. It has great liquidity, it tends to move well, and most importantly, it has voodoo lines. Let's start by looking at one of my favorite end-of-day setups and where the squeezes have shown recent confluences with voodoo analysis. So voodoo lines are a natural fit for options traders as we're trading a market where it's helpful to know strike prices ahead of time. As you mentioned, the voodoo lines are generally exhibiting one of three personalities, whether we're looking for price to hold a level as support or resistance, travel to a specific level, or simply stick to a level and consolidate. This study helps us identify the particular levels to use. The Tesla trades that we're about to look at benefited from knowing these levels in advance. they also benefited from the way price moves from line to line, so we can anticipate which of the voodoo lines to target and which levels to use. This is where we begin setting up the spreads that take advantage of Tesla holding a particular level as resistance. I knew we had a snow line with close proximity to the 625 strike, so this is where we begin setting up our short call spreads. You can see from the timestamp where we begin initiating these trades about 90 minutes prior to the cash close and scale into them as the session progresses. The end of day 15-minute squeeze that is shown here is my trigger chart. And if you spent any time in the options room, you know that this is one of my favorite end of day setups, especially after having failed at this snow line of resistance. So we begin this campaign with the anchor of the daily squeeze. And those of you that have studied the daily squeeze, the squeeze in general, will find this a natural addition to your analysis. So this is what gives me an anchoring thought that we may have some downward pressure in this market. Notice how we get the big gap below the snow line. We then recover and kind of climb our way back, but then look at my signal. So here's our end of day 15-minute squeeze that I'm always focused on for movement into the next session. Then notice where we fail exactly at that snow line. So again, this is where I begin to formulate the idea. This is where I actually start scaling into those short call credit spreads, utilizing the short call at that snow line. The end of day 15-minute squeeze fires exactly as expected, and the very next session the spreads are more than cut in half. With an average credit of 790, the next morning they're trading at 248, and really gave us basically no heat whatsoever as those short calls begin to dissolve. Now, that's a great way to trade this analysis, but some traders prefer the risk reward of a butterfly over that of a call credit spread. With that in mind, I began setting up a few plays with less risk. In this case, I added a $30 wide standard put butterfly. You can see that I've placed the short strike right at the 590. And look where Tesla heads almost directly when the market opens the next day. This is that same chart with a little bit more of a detailed view. And here we have our 15-minute squeeze. You can see the break of a little bit of that 45-minute kind of that angle you'd like to see. But again, failure right at the snow line, break that trend, and then look at where we're headed. We get a very modest rally that begins the session, but it does not clear that snow line of resistance and then continues on its path. You'll notice how it fails just a couple of ticks shy of that tree line about midday. But look where it rolls over and heads to at the end of the session. Ultimately, it does go, directly to this 590, and our butterflies were able to chalk up a quick 50% gain overnight. These were an excellent complement to the other, theta positive spreads that we had done. Now, one of my favorite setups and a key part of my 2021 trading plan utilizes the voodoo lines in conjunction with the squeeze. I've studied the squeeze for more than a decade and have learned that not all squeezes are created equal. Some will exceed expectations, some will consolidate longer than expected, and some will fire counter trend. Knowing which of these scenarios is most likely to unfold can add a considerable edge to your trading. These scenarios are best mapped out using the voodoo lines. Let's look at this using a recent example in Caterpillar. So this is a daily chart of Caterpillar with the Squeeze Pro. This is one way that I would look at a chart prior to having added the voodoo lines to my analysis. We've got a long duration squeeze that's oscillated through several phases of compression, a generally bullish trend, but no real levels to act off of. With the voodoo lines now added to my chart, I have a list of several inflection points the stock may face, and most importantly, I have a primary objective to associate with the daily squeeze. I have found the primary voodoo lines, the fire lines, tree lines, and snow lines, have a magnetic quality to them, especially when combined with daily squeezes. One of my favorite setups is buying those Delta 70 calls while the squeeze is firing and targeting these key technical levels. In this example, I did the Delta 70s in addition to the Delta 50s, yielding a 42% and a 51% return over a 3-day trading period. You're not going to find a more precise technical setup. And for me to say something like that, step back and consider how accurate these really can be. Here's my entry and my exit, just the forward duration, right? Taking us right into that tree line where we took just almost zero heat. But again, when I make a comment like that, I want you to think about Caterpillar was in a full-on breakout. It's trading at lifetime highs. To be able to call the high for the day in a $242 stock within 44 cents is more than just luck. It's a precise technical approach to finding pivotal points in a stock's price. Knowing these levels and being prepared to sell into strength is one of the most helpful things you can learn when pursuing directional options trading. This was the slide that we began the broadcast with, and you can see the daily bar, and I've magnified the highest price that it traded for during that session. And then you can see the price that I was able to sell those call options at. So on that one, I got out at $18.50, and the high of the day was $18.65. The other options I sold at $27, and the highest price they traded for was $27. I also had this pulled up. Now, this is today's chart, just glancing over at some live price action for you. But notice that this updated version of that chart, we have still not traded above $27. So from the moment that we got out until now, those were still the highest prices. I had 10 contracts of both the 220s and 230s. The in-the-money calls yielded a profit of $8 per contract. And the at-the-money calls were good for $6,200. Overall, the trade made $14,000 in 3 days. And not only is finding precision exits like this one of the most gratifying parts of trading options, but it goes hand in hand with not giving profits back, with not having to take too much heat. Think about that when we look at how Caterpillar closed that same day. This kind of close does not bode well for the next session. I'd say that this pattern with a 15-minute squeeze at the end of the day fills the gap from the previous session about 90% of the time. This knowledge adds an extremely powerful edge to directional trading. So again, I showed you those levels off of the daily, but if we're now looking at them kind of, zoomed in on this 15-minute time frame, here is where we were taking profits. Here is where the tree line is tested again. And here's where I'm telling you, how do you feel at the end of the day where the morning felt so euphoric? So, we're at lifetime highs and everything's going my way. Well, then by the end of the day, that close doesn't look too sharp, nor does that 15-minute squeeze that has a very clear downward trajectory. Like clockwork, Caterpillar gaps lower the next day, filling the gap and triggering the bearish 15-minute squeeze. Having sold at the highs yesterday, we can be more objective about where we might like to re-enter. So that was the campaign on Caterpillar. And, this trading methodology caters to several different ways of thinking. The markets, having been especially volatile as of late, has many traders looking for opportunities where they don't have to leave their money at risk overnight and they can focus on short-term trades. You will be hard-pressed to find a more helpful study set when seeking these kinds of opportunities. Let me show you what I mean with the following trades in Amazon. There are two primary things that caught my eye when I was setting up this Amazon trade. The first was the gap below the snow line. And if you were following that Tesla example, this is going to be very similar. So you'll notice the gap below the snow line. This is our first key piece of information. Then we have the subsequent lower high that was made the next day. This helps me form the opinion that I may have found a formidable area of resistance. The second is the 39-minute squeeze that then begins to form. If I know that 33.65 is resistance and I have a squeeze that's about to fire short, well, then I can begin setting up bearish trades to participate in the selling. When you're setting up an options trade, you're most always going to be doing one of two things. You are going to be paying a debit to initiate the trade, or you're going to be taking in a credit. Both are perfectly valid methods of participating in a move, and I find the choice often comes down to an individual trader's personality. I usually find myself somewhere in the middle and wanted to demonstrate both approaches to this technical setup. One common debit transaction is the put-debit spread. Here, I purchased a $200 wide put spread for an $80 debit to initiate the bearish position. The markets continued selling off, and after taking our entry, about 90 minutes later, I took my day trading exit signal off of a 15-minute chart. The spread was then trading for $92.50 or a 16% return on the debit spread. Here we have our entry and exit. Again, the break off of the intraday squeezes shown on the previous time frame, and look at the exit. Now, granted, it did roll over into the end of the day, and I'll show you a few other things against that, but notice how we bounce right at that skyline. If they're not showing up plain and obvious for you, remember that the labels on the right-hand side of the chart, these little bubbles that show up, these are basically, those are the levels just labeled on the right-hand side. So you can see plainly 3208 was that skyline. You come directly into 3208, and that's the low for about the next 3 hours. So that gives me an opportunity to basically to profit off of that shorter term move. And then the credit transaction can be a couple of different ways. But in this example, and because I was focused on a day trade where there's no opportunity for the underlying to gap against you, right? You're sitting there managing it on the kind of direct day trading kind of focus. So I chose to use a short in the money call. This using a very similar methodology, I'm usually a little bit more lenient in my Tastyworks account. So I gave this a few more minutes to see if it could roll over, but ultimately covered this on that bounce after the skyline and was able to profit, about $2,200 on 2 trades in 90 minutes. And that's just the pure day trading approach off of where Amazon was at in those moments in time. The next morning, as we continue this saga, right, because the whole bearish event that we've been taking place of was through these couple of candles, and then I was flat that because I was just day trading those. Well, the next morning, Tuesday the 11th, is a sharply bearish open for stocks. Several names gapped down 2% or more, and these bearish opens can be one of the most tempting moments to chase the purchase of premium-rich puts. However, since we knew Amazon's proximity to the fire line, we knew that for this particular FANG name, the higher probability trade was to look at selling those puts or to look at taking advantage of the sharp jump in implied volatility and taking the other side of traders that were reacting to their emotions and chasing entries. So here we can see on the 5-minute view where we initiated the sale of the front week put options. And, then a couple hours later, we're able to cover those short puts. Now, I love when the voodoo lines are totally precise. In this case, we were just a little bit shy of it. But knowing that the voodoo lines or the fire lines are the most important group in this study set, I was able to combine that with a 618 retracement that we had on the daily chart. And this is where we started selling those puts. Now, we took, they kind of came back, went just a little bit. But then look at how we are magnetically drawn into that next skyline. So that level there was at 3208. We rally up into it. And, that's where we took profits on that opening trade. Now, notice that after we hit the skyline right in here, we trade above it. And now we begin to reference this area as support and it gives us 2 more trades into the afternoon. So you'll notice on these time-stamped trades that they all occurred during the same day. I begin by doing the couple of trades that I've shown you here and documented, and then into the afternoon offered us 2 more opportunities to basically sell puts and, buy them back as the stock maintained its strength, maintained the support of the skyline, and ended up being a great day for day trading Amazon. So while these voodoo lines can be extremely helpful with day trades, the versatility does not stop there. We can use them in choppy markets. We can even use them on earnings trades. So let's look at an example of this with Peloton. First, we're going to look at it without the voodoo lines roadmap. So this is a 5-minute chart of Peloton with the extended session hours included. I would say for the most part, this chart strikes me as noise. I don't really have any clear inflection points to work on. As soon as we add the voodoo lines, our path becomes much more clear, right? Peloton was a unique trade to set up primarily because so much bad news had already hit the stock before the earnings numbers were released. I'm usually going to assume that most of this bad news is priced in and that the earnings move is likely to be muted. Voodoo lines are helpful in these situations as we begin to structure our spreads. So for Peloton and Thinkorswim, I had 3 put credit spreads that returned $3.80 each and 2 ratio spreads that didn't really return anything but were basically free to put on. They had a very high probability of at least making $1. I refer to these spreads as high probability lotto tickets, and they're one of my favorite strategies to employ in high volatility situations when I have good levels to place them against. The 4 spreads resulted in an overall gain of $1,100, and then I took a slightly more aggressive approach in Tastyworks, and you can see these orders here. So while you can go back and study these entries and exits, and of course I'm going through this documenting it with you and showing you what I have done, the thing that I really want to make a note of here is the respect of the tree line at 89.47. I purchased shares after hours, right? So here is the purchase of those 500 shares. And then I sold my first 100, actually ended up being my best 100 right there at the 89.47 tree line, exactly at that price. Once the cash session opened and it became more apparent that Peloton was going to be rejected at the tree line, I closed the remaining portion of the shares. The short puts were good for $1,300 and the shares were good for $1,800, returning just over $3,000 on the earnings campaign through Tastyworks. So again, just showing you, look at the precision after you add those voodoo lines on. So the idea is that after it makes that drop initially, right, just a little bit shy of the expected move, well, then you pick up the shares and you can see how basically right at that level is where I was selling those and was able to, make the best gain off of that. So, the majority of what I'm doing is focused on swing trading, day trading, options. There are places where you can still make good use of these in the futures markets. Every now and then there's just going to be a situation where you have a better tool for the job. And I feel like this is an excellent example to show you because, this comparison is like, think about the GLD ETF versus gold futures, right? Futures have the advantage of being a more available product, right? They're open just about nearly around the clock. And you can get a little more leverage through a GC contract than you can through just straight up GLD. So on the morning of May 17th, gold was breaking out. You had a huge trend line that had been cleared. It was really starting to gain momentum. And the voodoo lines provided an especially helpful map on the path to higher prices. With the breakout underway, I knew that the path to 1865, or that on the path to 1865, we may encounter a pause at 1869 and a dime, and then another at 1875 half. The opening strength carries us directly into that first area of resistance where I decide to book profits as the gold pit markets close. this is a great example of using technical targets and targets in time together in an effort to maximize exits. So kind of documenting this breakout, if you were to zoom out and look at this on the largest daily time frame, you can see that this is the move where we are starting to break out. So you notice as we clear that big daily trend line, we head pretty much directly into this skyline, and notice the failure at it. You know, this level is here well ahead of time. Again, note the exact price on the right-hand side of the screen, 18.69 and a tick. Notice on Thinkorswim where it populates the high of that particular, in this case, I'm using 5 days worth of data. So that basically tells you that that was the high for the past 5 days and a perfect spot to, wrap up the profits of that gold futures trade. So this is just one more way that you can make use of these technical levels in your everyday trading, regardless of which markets you're involved with. I know I can speak for both of us when I say that David and I are very excited to finally be able to bring you these setups and the logic behind them in our Voodoo Masters strategy course. In this course, David and I are going to be showing you how we set up these trades, how we read the systematic movement between the lines, and how to choose the right strikes for your own option spreads. The course is comprised of 3 primary pieces. We're going to have the class, we're going to have 3 days of live trading, and you're also going to get the Voodoo Lines indicator. So there again, the strategy class, which is going to be a culmination of the work that David and I have done together to bring you a comprehensive resource on how to use these levels. You're going to get the Voodoo Lines indicator for stocks, futures, and Forex. You're going to get the recording of everything that we do through the strategy class and the live trading. And you're also going to get 30 days worth of the Voodoo Line stock updates. So the course is going to be on June 12th from 12 to 4 Central Time. And then we're going to have the 3 days of live trading on the 15th, 18th, and 22nd of this month. This will be an excellent opportunity to learn and grow as a trader with these 3 live trading days. David and I swear by the Voodoo Lines because of their uncanny accuracy. And if you want more precise entries and exits, there is no better time to add this indicator to your toolbox. If you already have the Voodoo Lines and you've been following David and I for a while, that is no problem. Just give us a call for the sales or customer service team. Email works fine as well, and they will be more than happy to take care of you. So we did think of that ahead of time, and like I said, we'll be happy to take care of you. If you choose to continue the stock update subscription after the 30 days, you extend the power of the Voodoo Lines to more than 250 individual stocks and sector ETFs. This is a $47 a month fee, which I feel very comfortable in saying is a nominal fee for the type of work that you're getting. Again, David calculates these levels by hand, right? So every single one of them that you see has to be done manually. And that is part of what the subscription ensures, is that you'll continue to get these updates. We add these in as, hot names come up, and okay, everybody's trading GME. Let's get some Voodoo Lines on that. It kind of depends on what's going on in the current market, but that will keep you up to speed and, with active updates for the stocks that are traded by our Simpler Trading members. Also wanted to let you know that we now accept PayPal credit. So if that is a method that you would like to use, you can just add this to your cart, go through the checkout with PayPal credit, and then you can join us for the Voodoo Masters class. Again, that will include the strategy portion of the course. That's going to be Saturday, June the 12th, the 3 days of live trading, and the Voodoo Lines indicator that was used in every trade example that you've seen this evening. So it truly is one of the more transformational indicators that I have ever used. David is one of the most helpful mentors that I've ever had the privilege of studying under, and being able to combine what I've learned from the squeeze, from these various aspects of trading options. Sharing that with you is going to add a definitive edge to what you're doing. So, you can use the link there. We've got simplertrading.com/levels. If you would like to just sign up online, you do have that link that's available to you. Or you can call our offices at 512-266-8659, and they'll be happy to take care of any questions you may have or anything else that you need help with in getting signed up. And that brings us to our conclusion of the presented content pretty much right at the top of the hour. So we're going to open the forum to a couple of questions. If you guys have anything you would like to run by David or myself, or any additional thoughts behind this, we'll be happy to elaborate on it with you. Hazy says, I'm fascinated by this indicator that defies apparent logic, and I look forward to learning from you. When David talks about those patents that he has and just how his mind works, I think about how fortunate I am to come kind of under him or behind him and pick up on this. I feel exactly the same way. You got to remember, John's been in this for a while. Think about how many people bring him analysis on a daily basis. David's stood head and shoulders above everything else. So while so much of it falls by the wayside, this I saw and I immediately gravitated towards, and I know that you'll probably do the same. Excellent. Thank you, Gus. I'm glad you enjoyed the broadcast.
So Henry, I'm seeing a question that's come up a lot here, and it's what's the difference between the snow lines and the tree lines and the fire lines and all that kind of stuff, right? And it's a fantastic question because it's one. Look, to be honest with you, we've said, yeah, the fire line's more important, and then the tree line, and then the snow line, and okay, but what does more important mean? Right? I get that that's a complicated sort of thing, right? I mean, okay, if any of them can be support and resistance, and quite honestly, they can, right? Look, that's a really simple way to use it. And I know literally thousands of traders using the voodoo lines just like that, right? I buy at support, I sell at resistance. Sean just posted here in chat. Thank you, Sean. I love hearing stories like yours. Sean said, for what it's worth, my best trades this year have been selling ratio spreads at fire and tree lines. He says, did it in Amazon, Tesla, Netflix. Yeah, right. So you can just sort of say, hey, I like the gravitational pull of those major levels. I get it. And you can use it that way. Right. What the class, and if you just want the indicator, you can do that. Sean's found a way to make it work. What the class is about, right, is going the next level beyond that to learn how to read the way that price moves between the lines. And I'm sorry for being vague. That's why we made sure not only to have a full 4 hours on a Saturday class to walk through it, and then included just as a complete bundle also the live trading, so we get to reinforce it and spend that time learning to read the maps, because what makes the variation in the levels different, right? What makes them different is how to interpret, the moves between the lines. And I apologize for being vague. We've spent a ton of time constructing this out, and it takes a bit longer than we have here, but to walk through not only how to interpret those movements, but then construct the trades around it. Trades like we showed you, trades like it sounds like Sean is doing, and that sort of stuff.
Absolutely. And then John, what other indicators do you find most complement the voodoo lines? The squeeze, ready and fire? What's the most usable or unbeatable combo? Well, I always enjoyed that thought of, if you find an author that you really enjoy, you dig into more of their books. It's the same way when you find a developer, which in my case is David, right? So he's the developer of the voodoo lines. He's also created the Ready, Aim, Fire. So if you've used other pieces of his work, it will seamlessly incorporate into what we've discussed here. You do not have to have them, right? One thing that I hope everyone that is on this webinar has at least studied or looked into is the squeeze, right? And you can get the squeeze on TradingView. You can get it on Thinkorswim. There are several platforms. So the voodoo lines stand on their own, and they can be used in and of themselves. But those of you that are veterans of the squeeze study are going to feel right at home incorporating this into your analysis. And David, being the author of so many things that I find useful, I do study his other creations, but this will primarily be focused on what I would say is his biggest venture or the most dedicated piece of study, and those are the voodoo lines. So that's what we'll be focused on, but in an effort to answer your question, that's the way that I would bring that to you.
So, Henry, are you able to bring up some charts real quickly since you've got the screens shared? I would love to show a chart of Tesla on the, let's say, the daily, right? Because look, a question came through here just a minute ago about asking, hey, can you give us an example of when the voodoo lines failed? And look, straight up, absolutely, right? We don't have anything to hide. We'll show you this stuff. And if you look back to late April, early May, and I don't know if you have your drawing tools up, Henry, but that's when Tesla was trading up above that fire line, and it started coming back in. And Henry and I were looking at that and saying, this is a good spot to come in and put on a bullish trade, right? Tesla's come back in. We have these market maps that we told you about that said, this is an opportune place to trade it. And I stand by that decision because of what I know about, right, the systematic way price acts at these lines. And what did it do? It did the opposite. And in fact, it showed what I told you was one of my favorite setups, right? It came, it popped below that fire line, right? And right to a snow line, right? Because we said it has systematic movement. And then before it continued down, it retested that fire line from below. Can you all see that, right? What I'm talking about, right? And how it's the inverse of some of what we're looking at in the S&P 500. Look, the magnetic pull is there, even if the idea is wrong. And that's where, right, remember I told you guys earlier that just knowing these levels, even if you're not right, can give us some benefit, because it did two things for us there. One, by bouncing up into that fire line before coming down, it showed us, yeah, it wasn't going up. It wanted to head further down, right? And because of how we constructed our trades at that level, we still made money near the fire line. So that bounce, one, told us to get out, and second, let us get out at a profit. So we were wrong on our first read of the voodoo lines, right, and the price action at it, and we still made money, right? Now, look, I'm not telling you that's going to happen every time. I told you I'd be honest with you guys. But yeah, these things don't always work, and we don't always read it right. And that's why we spent so much time in designing these strategies, right? No trade is ever going to, no setup is always going to work every time. But when we have a tool like this that gives us these messages, and we can create trading strategies that take advantage of that behavior, not to make every trade work out, but to shift the odds in our favor. That's what we want to do, right? That's what this system is all about.
Absolutely. And as you zoom in on this, notice that how many times this fire line was tested as a relatively precise inflection point. You know, you can look at it on this day where it was testing it from the underside. The almost perfect high of the day was right at that level. And then as you're mentioning right here, where it does ultimately fail from is, again, a test of that fire line from the underside, and then a major failure as you're failing from the most important line in this study set. As I would show you again, and as I documented in these trade examples, Other spots where you can take this, use the caterpillar example. I'm not going to show you the squeeze because you can imagine what it looks like, or place it on your charts, right? This one is shown with the clean voodoo lines by intention, but the squeeze was firing right through here, right? If we were to imagine the lower subgraph, this is where that signal is firing. Look at how it takes you directly into this tree line, and then it continues to be, 1, 2, 3, 4, 5. You have yet to exceed that level. So knowing these ahead of time and continuing, it's like, okay, that Tesla example didn't work out perfect, but look at how almost to the penny this has been respected now for weeks and 5 tests of that level. You also saw it in GameStop where, okay, we did eventually go on and exceed this level. I took my profits right here, and I was quite content with that, because think about the next day and think about all of the emotion that goes with it. Say you decide to keep pushing it. You're going to try to get through that fire line. Well, then you need to be prepared to hold through a day like this. As I said, taking profits at really good levels goes hand in hand with not giving too much back, right? And then you talk about the systematic movement between them. I would say that this was failure at the fire line, and then you come just a couple of dollars short of the tree line here, and then we're right back at it. So there really is a way that it ping-pongs back and forth between these, and it's been my primary effort, at least with those daily squeezes, to move up into those major voodoo lines, and then I'm content with that. If it decides to go past it, be that as it may, but those are some of the best ways that I've seen to track that price action, and where I believe that you will find it to be a great complement to any of the squeeze analysis you may have already done. What account size do I need to follow this strategy? We get that question a lot, and I would venture to say that if you have a funded account, almost regardless of size, let's say, $2,500, you can make good use of these levels. Now, if you have a 6-figure account, you're going to be able to be in a lot more, right? You can leverage it. You can do a lot more at one time. If you are working with a smaller figure, well, then you may have to kind of pick your spots or only be in 1 or 2 trades at a time. But no matter what you're doing to help you define your levels, to help you find your targets, this work will add an edge to what you're doing. So regardless of account size, I would encourage you to at least entertain it. And I believe with a dedicated focus and the tutelage that David and I are going to be able to provide, you will find that it brings an edge to your trading.
So Henry, here's another one I'm seeing. Folks are asking, hey, you're talking about profiting from this move in Tesla, and and how it made money by sticking to the fire line, and whether those sorts of trades require being an expert in options. And really, I meant what I said at the start of the webinar. About how methodical Henry is, and this if you've taken any of his classes before. When he talks about how to set up a trade, right, he walks you through exactly how to decide if it's the right symbol to be in, right, exactly how to set up an option spread. And it will be helpful if you have some familiarity with option spreads, but we're going to walk you through, right, how to choose each strike to get in, quantity, what expiration, step by step, in the same methodical way that Henry's known for, right? And look, for those of you who are more experienced, we also give some ideas on some alternative ways that you can construct them that we don't walk through in detail, but the core setups, right? Yeah, we walk you through having set up spreads before will be useful, but beyond that, no, you don't have to be an expert.
Yeah, and then one that I've seen a couple of times here too is, are the voodoo lines time frame dependent? And they are not. This is another fascinating thing that is a little tricky to convey in the amount of time that we have this evening, but they're relevant on a 1-minute chart or a weekly chart. Remember, the most important part about it and why they work that way is because the varying degrees of importance. So, there again, we work backwards from the fire line to the tree line, snow line, etc. You will see these levels impacted. Take, for example, I showed this to you in the slides that we did with tonight's broadcast. But when you see this level and how it was, I could give this level to you in Caterpillar on a daily chart, and you see how important it is there. Well, if I brought it into a 15-minute chart, it's going to look exactly the same, right? You're going to also see, if anything, it's going to actually look more precise, because you can see these levels test and fail, and again, unable to get through the 245. So in a weird way, they're going to show up exactly the same way on a 1-minute chart as they will daily or weekly or anything else. But the importance comes from, which level you're testing, and how it's being done. And that will help give you more information of how you'd like to structure your trade.
So, folks, for those of you who've been asking what symbols we have the voodoo lines on, I just put through that list in chat, right? So you can go ahead and just click that link. That PDF has the first few pages have all the whoops, I lost the room. I don't know if you guys can still hear me. I will be right back.
Sure, David. Yeah, no problem. We've still got a good broadcast going, and happy to hang in here for any of you that may have not had your questions resolved yet. And good afternoon, Rich. It's good to see you. It's always nice to have a friendly face in here for these evening sessions. I hope you've got a lot out of tonight's broadcast. Are the voodoo lines' accuracy correlated with individual market makers? I would have no way of answering that. I've known a few market makers, and I work with some on somewhat of a daily basis, but I wouldn't say that they're not tied together. I study them independently, and while sometimes I think that the market maker move is worth looking at, it is a very different realm of study, and I would say that the voodoo lines are much more accurate. So awesome, Rich. Looking forward to that as well. I'm so fortunate to be able to work with David. And I think you guys will get a lot out of it.
Hey, so Henry, interesting about those. About that question about market makers, I do actually have a few options, retired options market makers who just trade retail like you and me right now, and they use and love the voodoo lines. So I don't know that there are any actively working as market makers right now in the options markets. I think it's mostly computers these days, but yeah, there are in fact a few of them.
Awesome. Well, that makes sense, and I should have known that you probably would have had some contacts like that. But and then also here Karen asks, how is it decided what tickers get the voodoo lines? So there's a few qualities or characteristics that we're going to look in these names. For the most part, you like to have good liquidity, right? Because we don't want David to do all of this work to generate the levels and then to find that it's not really worth trading because there's nobody in there, or for it to be too risky, right? Because of this complete lack of liquidity. So that's one of the first things. Then, as I mentioned, like take UI, for example. UI was a chart that I had been wanting to trade. It didn't have voodoo lines, and David was able to kind of conjure them up. Another would be GameStop. You know, these meme stocks have not always been in play, but as they become more relevant to the conversation at hand, well, then David dives in and, sees if he can get something that, shows up properly. You also like to see, and I've learned this also from my study in Fibonacci, you need to have decent swings, right? If you've got something that is largely trading sideways, it's not going to generate the type of, ABC moves that we're looking for. And, it's these things that go into the creation of the voodoo lines. And as we decide to add them or omit them from an update, those are a few of the things. But thank you for your participation tonight and your participation in the chat rooms. I recognized your avatar, so I wanted to do my best to help you out there. And then do contact the sales team, Matt in New York. If you already have the voodoo lines, just give them a call and they'll be happy to take care of you. I appreciate you joining us tonight.
Yeah, and I will share. I'll go ahead and share Henry's thanks. Really appreciate your spending a little bit of your evening with us or whatever part of the day it is where you are. I know I speak for Henry as well when I tell you we really enjoy doing this and you help make it possible. So we are absolutely grateful.
Absolutely. So it looks like we've covered most of the questions. We're kind of sitting here filtering through a few more. I feel like between that presentation and everybody kind of getting to the, the questions that tend to come up there kind of right after the presentation, we've covered most of it. So if you do have anything else you're curious about, we'll hang out for maybe another 5 minutes or so. And then we will carry this analysis into tomorrow morning for those of you that will be joining us in the options room. Just some of the things that I was showing you here, again, for those Caterpillar options, you look at the Caterpillar chart and you see how price has been right up against that tree line several times, right? Testing it to the penny. But look at how the options have decayed over time. So not only was I able to sell those at 27, and not stomach all of this volatility, but even as the stock has recovered, the option prices have not recovered. So again, that ability to sell directional options into these key levels is one of the most helpful and transformational things that I have added to my directional trading. Do the monthly updates require manual intervention or is it all done through the platform? It depends on the platform you are using. So if you have TradeStation, they're done automatically. If you have Thinkorswim, it is a manual process, but it takes about 30 seconds. If you're familiar with installing an indicator into Thinkorswim to begin with, you will have no problem. I mean, David's actually gone to great lengths to make the upgrade process seamless. So it's really no problem at all. And when he sends those updates out, they come with an updated watch list. So you know every symbol that has been updated, changed, added, anything like that. And then all I do is just copy and paste that into Thinkorswim, and you have a very easy watch list to work off of. Our pleasure, Esther, and thank you for the feedback. Is there any additional cost to the voodoo lines after the initial cost with the class? So I did speak to that in the webinar. It is documented because I want to be very upfront about that. But I'm also happy to answer your question in that if you were to pick this up and you get the voodoo lines, you have the voodoo lines forever. They are your indicator and they will always work on your charts. If you want the updates, that's where it's the $47 a month. And it's just the update fee because there is a manual process to getting them updated. But again, and I'm not going to make it as a guarantee, but I would almost guarantee that if you put these on your charts and spend the time for the dedicated analysis and the work it takes to make them work, you will want the updates. So again, if you would like to join us for the Saturday course, the 3 days of live trading, where David and I are going to be approaching this with a joint effort to really bring you the best of what we've learned in this study set and how to execute against them, you can use that link for the online purchase. That's simplertrading.com/levels. Or you can give us a call. Again, that number 512-266-8659. So, and then during the live sessions, that is the entire purpose, Sam, is to set up the trades in a live environment, from start to finish, execution to exit, and walk through it with you every step of the way. And then how much time does it take to apply the monthly update? There again, if you're familiar with Thinkorswim and you know how to install an indicator on there, it'll take you about 30 seconds. So there's really not much of anything to it at all. Hey, our pleasure, Danny. And I do believe that pretty much brings the webinar to a close. So unless you have anything else you would like to add, David, I just wanted to thank you guys one more time for taking the time to approach this with David and I and dedicate some time to the work that I have found to be so incredibly helpful. I hope it really does bring an edge to your trading, and I hope to see you for the live events.
Yeah, I think that's it for me as well. Just I will share my thanks and gratitude again, folks. And I know a bunch of you have just mentioned that you've already signed up. Really looking forward to seeing you all a week from Saturday. So so for those of you who are joining us, see you all soon.
All right, excellent. Thank you guys so much. And with that, I will conclude tonight's webinar, and I hope to see you in the options room tomorrow.